Mark the date in the calendar, May 1, 2026. On that date, major changes to the private rental sector in the United Kingdom take effect. For decades, the system has been straightforward. A landlord provides a property, a tenant pays rent, and when disputes arise, there is a legal process to end the tenancy. The government has argued that this system is unfair and has introduced the Renters' Rights Act, presenting it as legislation designed to protect tenants, end so-called no-fault evictions, and provide greater security, stability, and additional rights. The practical outcome has been a sharp shift in landlord behaviour. Large numbers of landlords are exiting the market, creating what is now the largest withdrawal of private landlords in recent British history. Ownership of rental property is increasingly viewed as a financial risk rather than a stable investment. As a result, thousands of rental homes are expected to be removed from major listing platforms as the legislation comes into force. For tenants seeking housing in 2026, this change translates into intense competition for a shrinking supply of homes. Multiple applicants are often competing for a single property, rents are being negotiated informally, and traditional measures of being a reliable tenant are no longer sufficient to secure accommodation. To understand the scale of this response, it is necessary to examine Section 21 of the Housing Act 1988. For approximately 30 years, Section 21 allowed landlords to regain possession of a property with 2 months' notice without needing to state a specific reason. These were commonly described as no-fault evictions. While often portrayed as arbitrary or abusive, the provision was widely used because the alternative, fault-based eviction through the courts, was slow and expensive. When tenants stopped paying rent or caused serious damage, court proceedings could take more than a year and involve substantial legal costs.
Section 21 therefore functioned as a safety mechanism. It gave landlords confidence to rent to tenants with lower credit scores or irregular income on the understanding that there was a predictable way to recover possession if a tenancy failed. Under the Renters' Rights Act, Section 21 is abolished. From May 1, tenancies will generally end only if the tenant chooses to leave or if the landlord can prove a specific legal ground for possession in court. On paper, this represents increased security of tenure for tenants. In practice, it significantly increases the level of risk for landlords. Where serious problems arise, landlords must now gather evidence, instruct solicitors, and wait for court hearings. This is occurring within a court system that is already heavily backlogged, with waits of well over a year reported in many areas. During that period, landlords remain responsible for mortgage payments, insurance, and maintenance, often without receiving rent. Large corporate landlords can absorb such losses. Small landlords, particularly those relying on a single rental property as a pension or secondary income, often cannot. Many are therefore choosing to sell before the new rules apply. Across cities including London, Manchester, Birmingham and Bristol, a growing number of tenanted properties are being placed on the sales market. In many cases, Section 21 notices are being issued ahead of the deadline to obtain vacant possession.
This has two immediate effects. Existing tenants are being displaced as landlords seek to sell, contributing to increased homelessness applications. In addition, once these properties are sold, they rarely return to the rental sector, as they are often purchased by owner-occupiers or first-time buyers. The net result is a reduction in rental supply. With demand unchanged or rising, upward pressure on rents follows. Rent increases of around 10% per year were recorded in 2023 and 2024. With further supply constraints expected, projections of significantly higher rent increases in major cities have been widely discussed. Letting agents report extremely high volumes of inquiries for new listings, sometimes within minutes of a property being advertised, to the point where listings are withdrawn simply to manage demand. Alongside this, an informal or shadow market has developed. Faced with higher risks, landlords are becoming more selective and increasingly reluctant to advertise publicly. Properties are instead offered through personal networks, referrals, or internal company contacts. This disadvantages renters who are new to an area or lack local connections, as many available homes never appear on public platforms. The Act also introduces a right for tenants to request permission to keep a pet, which landlords cannot unreasonably refuse. While popular in principle, this has altered selection behaviour. In competitive markets with many applicants, landlords may simply choose tenants without pets, without providing explicit reasons. As a result, pet owners may find it more difficult to secure accommodation, despite the formal protection. Another persistent issue is rental bidding. Although the government has expressed concern about tenants offering more than the advertised rent, enforcement is challenging. Informal offers of higher rent or large upfront payments continue, particularly where supply is scarce. This favours tenants with significant savings and disadvantages those reliant on standard monthly income. The Renters' Rights Act also applies the decent homes standard to the private rented sector. Issues such as damp, mould, and inefficient heating systems must be addressed. While the principle is widely supported, compliance can be costly. Retrofitting older properties to meet modern energy efficiency standards can require substantial investment. For landlords already facing higher borrowing costs, the choice is often between funding major upgrades or selling the property. Many are choosing to sell, further reducing the supply of lower-cost rental housing.
Reforms to Section 8 are intended to provide alternative grounds for possession, including selling the property or housing a family member. However, these grounds require evidence and come with restrictions. Properties recovered for sale cannot be re-let for a defined period, and misuse carries significant financial penalties. This has increased concern about inadvertent non-compliance and legal exposure. As a result, the overall perception of small-scale landlordism has changed. Buy-to-let, once viewed as a straightforward route to retirement income, is increasingly seen as legally complex and financially uncertain. Many long-term landlords are choosing to exit despite having stable tenants and modest rent levels, citing loss of control and rising regulatory risk. At the same time, new financial risks are emerging for tenants and their families through the expanded use of guarantors. Guarantor requirements, once limited mainly to students or those with poor credit, are now becoming standard even for working professionals. Many tenancy agreements include joint and several liability clauses, meaning a guarantor may be responsible for the full rent or damages of all tenants in a shared property, not just the individual they intended to support. Cases have arisen where parents or retirees have faced claims for arrears incurred by other occupants they do not know. For tenants searching for housing, competition has changed the process significantly. Landlords are prioritizing stability and low perceived risk over maximum income. Clear documentation, evidence of long-term employment, willingness to commit to longer tenancies, and the ability to move quickly are increasingly decisive factors. In some areas, a substantial proportion of tenancies are agreed based on video viewings alone, due to demand.
The Act also introduces greater judicial discretion in possession cases. Even where a landlord establishes a valid ground for eviction, courts may delay possession if eviction would cause exceptional hardship to the tenant. While this can provide important protection, it also adds uncertainty for landlords attempting to sell properties with vacant possession, contributing further to decisions to leave the sector. Looking ahead, ownership of rental housing is becoming more concentrated. Large institutional investors and build-to-rent operators are expanding, supported by scale, access to capital, and dedicated legal teams. These operators are generally better equipped to manage regulatory complexity and payment delays.
Rents in such developments are typically higher, with standardized services and automated rent increases, and limited scope for individual negotiation. The cumulative effect of these changes is a transition away from small private landlords toward a more corporate rental sector. The traditional buy-to-let model that dominated for decades is diminishing. Higher taxes, elevated interest rates, and increased legal risk have altered the underlying economics. For tenants, the immediate reality is a tighter market with fewer options. For landlords, particularly smaller ones, the incentive structure increasingly favors selling rather than continuing to let. The legislation was introduced with the stated aim of preventing unfair evictions, but its broader impact has been to reduce supply and increase competition for available homes. The result is a rental sector where formal tenant protections have expanded while access to housing has become more constrained.